Hi, I'm Pattu from freefincal. In this video, let's look at the performance of active mid-cap mutual funds against a mid-cap index, the NSE mid-cap 150. Many people believe and many people sell, obviously people in the mutual fund industry sell mid-cap mutual funds, active mid-cap mutual funds, saying that maybe large cap fund managers may have difficulty in beating the index, but certainly, at least in India, things are different. There's a lot of opportunities in the mid-cap space and of course in the small cap space. Small caps we will look at later. There's a lot of opportunities in the mid-cap space, so active mid-cap fund managers should be able to beat the index easily. Now, is there any kind of substance to such thinking? So if you look at the trailing returns, in the last 1 year, only 5 out of 26 mid-cap funds have bet the index. When I say index, it means Nifty Mid-Cap 150 TRI in this video. Trailing 2 years, only 4 out of 24. 3 years, 12 out of 24. 4 years, 10 out of 22. 5 years, 7 out of 21. 6 years, 3 out of 21. 7 years, 5 out of 21. 8 years, 11 out of 19. So, except for that one duration, 8 years, where even there it's only 11 out of 19, you can see it's typically less than 50% of the actively managed funds have managed to beat the index. That's a very, very poor record. Considering now, I mean, when I say trailing, now it's after the market recovery. So that's a poor record. Okay, let's not look at trailing returns. Let's look at rolling returns, because then at least you can look at every possible 5-year period, 4-year period and 3-year period. So out of every possible 5-year period since 1st January 2013, only 5 out of 20 funds have bet the index 70% of more or more. That is, if I have 100 5-year durations, only 5 out of 20 funds have bet the index for more than 70% of the returns considered, 5-year return periods considered. Again, if I use that same benchmark of 70% consistency, only 5 out of 22 funds will qualify over 4 years, and over 3 years it's only 6 out of 23 funds. Now this data is obtained from the equity mutual fund screener. The latest one for October has just been published. We publish these screeners every month. As you know, you can get the link for the screener in the main menu. So it's not a flash in the pan. It is a problem. Active mid-cap fund managers have also been struggling, and it's not because of some SEBI regulation or something. They have been struggling even before that. So the question is, what is the alternative? Will you invest in a mid-cap index fund? Well, the problem is there's too much of tracking error in the mid-cap space. It's like 2%, 3%, or even more than that kind of tracking errors are there. It just makes me very uncomfortable. I believe that there is not enough market depth in the mid-cap space to track an index, and that too 150 stocks. I think there's also a 50 stock ETF or index fund also. It's there, I think, but still the impact costs are too high, as I have mentioned before. I would recommend using the Nifty Next 50 as a proxy for the mid cap index. It is definitely not a large cap index. You can use it as a proxy, and that's what I would recommend. Of course, again, since the market recovery, the Nifty Next 50 has not done as well as the other indices, including Nifty or Nifty Mid-Cap 150. But those things happen. Those cyclic, returns will always happen. But I mean, instead of an active mid-cap fund, I would definitely recommend the passive route using Nifty Next 50. But it can be frustrating to hold the Nifty Next 50, and this is one such frustrating period. That's for the last 5-6 years, the Nifty Next 50 has been a frustrating index to hold. The Nifty Mid-Cap 150 was also a frustrating index from January 2018 to at least the March 2020 crash. It kept going south. After that, the recovery in the mid cap segment has been better than the Nifty Next 50, and that is the reason for the outperformance in the trailing returns periods. But if you look at the rolling returns, I have already considered that before. The Nifty Next 50 has done well, and I think it's still a good choice over the mid cap index.